All right, good morning, everyone. Sorry for the late start. Just going through some additional information on Glencore and this morning's listings. Let's get going. Okay. We had a slight pullback out of the S&P last night. We did bounce up into the close a little bit. You can see there, sectors kind of mixed. In the U.S. Obviously, we continue to get more of the central bank members, the Fed members that are out speaking, on behalf of, on their tours or their speeches to universities and things like that. We had some commentary out of Fed President Lockhart yesterday saying that reduction U.S. bond purchases could very well take place next month. You also had the Fed governor from Minneapolis who was out last night saying that he is very much supportive of a peg of the very low interest rates for extended period on unemployment rate all the way down to 5.5% rather than 6.5%. So we did have kind of, two people on either side of that yesterday. So we're going to continue to watch the rhetoric that comes from the Fed officials. I think consensus is starting to become December or January. And I think that's what we have to work off of until either the data changes or we get something from one of the main members that's just very obvious. All right, we had Chinese stocks that fell along with the rest of Asia yesterday on the back of basically a disappointing plenum. They've released so little information about it. Everything that I read, it's just very, that China's never exactly been transparent. But they're looking at potentially some of the biggest policy reforms since, the 1990s. And I think that people are nervous of it. What's been really interesting is that the rally we've seen for the last year plus out of the entire globe has totally left China out of it. China's gotten no rally, and I find it very difficult to believe that a country that's growing at 7 or 7.5% stock market can remain stagnant for multiple years, especially when a lot of the industries aren't trading at exceptionally high multiples. So something just doesn't really make sense to me amongst all that. I know that the Bank of America hedge fund sentiment index, their biggest fear at the moment is China. It has been China, I think, for every month out of the past 6 months, except for 2 months ago when they were worried about debt ceiling negotiations. So, it's definitely an issue there. And we continue to need to watch that going forward. And we saw that copper got pounded there. Statistics Bureau said that the output in China rose to 2.6% higher than the previous record in September. So we've continued to just see that under pressure. All right, today we've got an actual big day here. First of all, we had SPAR that was out with full year numbers this morning. Came in at 697, crushed it on headline earnings per share. Also, a small beat on revenue and beat by 1 cent on the divvy. But very good headline numbers. I think that the share is probably on the more expensive side relative to some of its peers, but maybe the market obviously knew something here because earnings per share looking brilliant. We've also got Tencent that's out today. We expect it to be out maybe between kind of 10:30 and 11:30. That's kind of the time period where we'll normally see it come out. Just remember the revenue and net income numbers. I remember last time on the Bloomberg terminal, that's what we saw popping up. That we're looking for 15.5 billion yuan on the revenue number and 3.96 billion on the net income number. So maybe write those down. When that number breaks later, we will without question see some movement. What's also going to be really important is any commentary from WeChat to see how much traction WeChat is gaining. If they have been able to monetize WeChat at all, will be an exceptional positive, I think, for Tencent. I think that also, last time we did get a bit of a disappointment. We saw it trade down, and the next few days we actually saw it, really trade up higher from there because, some of the numbers that we were looking at, I think, were, depleted simply because of of some of the major investments that had. So, all right, the big thing today as well. One of the other big things we've got to look at is a Glencore listing. Ticker symbol is going to be GLN. We're looking at, obviously a dual listed. It's not an IPO. So at the moment, I think it's trading at around £3.31 as of the close of London yesterday, which will put us at the price around 54 randish. So that would be somewhere where you would expect it to uncross if it uncross around the same price. And then you can see there the forward PE at 17.74, dividend yield at 2.1, and Bloomberg target price at £3.68. What's interesting is that the forward PE is running quite a lot higher than its peers. If you have a look here, you can see one of the reasons for that is the expected growth outlook for Glencore is much higher. They are much more leveraged business. They're more leveraged than Billiton by a factor of almost 4, if I'm not mistaken. But that being said, if commodity prices do well and the global economy is doing well, then they're going to benefit more than Billiton were. So it's kind of quite a high risk reward play. With Glencore, you can see here that they've got more. They've got more sectors to their business than the traditional miners, the Billitons, the Rios, the Vales, and Anglo Americans. One of the biggest parts of their business is the trading business, where they actually broke commodities. One of the biggest, if not the biggest, commodities broking businesses around the world. You can see here just some of their main. The main products that produces that they mine. We have copper, which is obviously the biggest number there at 30%, zinc at 13%, coal 14%, nickel 3%, oil 4%. Marketing metals at 22%, marketing energy at 16%. So I mean, you can see where the real revenues are coming from. Obviously, copper's the big daddy. Copper got slammed last night, maybe under pressure a little bit today. And you can just see how important iron ore is to Rio Tinto and Anglo American and BHP Billiton. So this definitely doesn't have the iron ore play in it. Also probably the reason why it's trading at a bit of a premium relative to the others, simply because everyone's so bearish on iron ore over the next year and a half or so. So anyway, just trying to give you guys a little bit more of a picture on the outlook for this listing and how it compares to its peers. All right, market data out overnight. We had machine orders out of Japan, slightly less than expected. We also had the CGPI in line. We have Spain CPI out at 10. We got jobless claims in the UK at 11:30. We've got the ILO unemployment rate out of the UK as well. I do believe that they are also coming out. I think Carney is speaking today for the BOE, and we're going to get a look into some of their outlook for growth and inflation. So look out for that as comments maybe come out on that today. We've got industrial production in the Eurozone, and we've got local retail sales at 1 o'clock, and then we've got MBA mortgage apps in the States later this afternoon. All right, let's get into the maps. All right, the first one that I want to have a look at is the U.S. dollar ZAR. Really important what happened yesterday at the end of the day, and you can really see here we managed to hold 1040 kind of on a closing basis. You can see that we are up above that earlier on in the session. We got a nice little move back below 1040, and this is big because this is the weakest level that we've seen in the rand in years. The long-term chart and the rand, I mean, we can have a look at that as well just quickly. Let's look at let me actually go back a little bit. We'll have a 20-year chart on the rand, and you can see here, I mean, especially when you run from the sort of 1040 level, it's a major level. So it's not just the level for the year, but also it's the lowest that the rand's been going all the way back to 2002. So I can't stress the importance enough that we hold this sort of 1040 level. If we break below 1040, I really think I think it's good night nurse anyway for the rand, but I think it'll get ugly quickly if we hold below 1040 on the REN. All right, let's look at Xaro. The rudder tells me that I'm creating a head and shoulders here. It's not necessarily there. I agree that it is a little bit rough, but I still think that there is definitely some sort of rough head and shoulders set up here. It's not your classic pattern, but you know, and the real reason for that is just because this left the left neckline here is just not that well defined. But anyway, bottom line is I think there is a rough head and shoulder here. We dropped it at 151 on the close yesterday. We closed down to 150. And either way you look at it, I mean, we've dropped below recent lows here at 151. I think a breakdown from that pattern, either way, from this little right shoulder or from the recent peak up here at 158, we should see potentially 7 Rand a downside to put us down to around 144 on a quick target out of Xaro. So I do think Xaro's potentially got some more downside. You know, this thing has just been underperforming the entire rally that we saw recently in October. I mean, you can see how we traded in October. We did not trade well in Xaro. It's been a bit of a soft move, you know, relative to its peers. Anglo is also dropping a little bit of support yesterday. You can see it's dropped further and after hours in London, basically just strictly due to the Rand. We'll see how these things open up this morning, but there's some sort of support. This thing basically failed to break out to the upside here. We had a bit of a false breakout. Couldn't really break out to the upside of this little recent pattern, and now we're looking like we're failing and potentially coming down to test this 200-day quite quickly, possibly even today at 35.5. And you know, just starting to look a little bit ominous for some of these miners. You know, now with the Fed taper talks, you're starting to see it priced in. I mean, copper, we've just dropped 320 this morning. You can really start to see in the mining space we're coming off. We're at 93 handles on the light sweet crude price. So definitely under pressure at the moment in the commodity space. Fashini, I wanted to show this one. I mean, just simply because we did. I know we've talked about this a session or two ago and talked about 103 major level. It needs to hold 103. You know, to see if we can you know, potentially get any sort of bounce. You can see there we did come down. We tested it on the intraday. We managed to close up at 104.30, so basically right where we opened. And that's a big hold in my mind. 103 is definitely the definitive level. I think maybe that level is even around 102.70. But bottom line is that level, major level in Fashini, their earnings weren't nearly as bad as some of its peers. Wouldn't be surprised to see if we got a nice little bounce up off of this 103 level. I'm not saying that it's a high probability play, but you know, it's an idea. Naspers, I just wanted to show simply this morning because obviously we're probably going to see a big move today one way or another. At the moment, we've got a bit of you can't even really call it a flag, but you can see there we've kind of just been drifting down in this slow sideways fashion, very controlled manner, and it to me, you know, anytime stocks are moving like this, even if it's moving down, you know, you start to move to the upside of these patterns, you can very quickly get breakouts. There's no conviction on the downside. It has underperformed as of recently, but obviously monster earnings today. If we could see, you know, obviously we're down about 2.5% on Tencent overnight, I believe. If we see decent earnings out of these things, I don't see any reason why we don't rip to the upside of this recent pattern. I think if we take out sort of 255, which is where the highs were back in September, I wouldn't be surprised to see us make that move up and take out recent highs and get all the way toward 1,000. So just watch Naspers today. I'm just throwing it out there. Generally, I think we've got to drop below 900 for the bottom to really fall out of Naspers on the downside. All right, Vodacom, we'll look at a 2-year here. I wanted to just show here. Well, I didn't need to zoom in that much for that, but you can see we've really broken out of this recent little consolidation that we had in. Sorry, I'll just zoom in a little bit so you can see it a little bit more clearly. This recent little consolidation that we had in Vodacom that we've popped out of here now to the upside. The reason why I wanted to show it on a 2-year is simply so you could see, you know, the same level that we've talked about, you know, however many times. 117, massive level, and we popped above it yesterday, and we really got a breakout as it went above 117. You saw it move up quickly, closed at 118.50. I wouldn't be surprised to see this thing move up to, you know, kind of the where potentially you could set up a left shoulder or the right shoulder of a Head and Shoulders here closer to 123. Just watch this one on this breakout. I think it's definitely got some more upside. Some rumors out there that they may be close to nailing down the Neotel deal, which I think the market is looking at favorably. And the last one I'm going to show is Woolworths. Woolworths, you can see here right around $68. There's definitely, excuse me, definitely some sort of support. When we broke out here, we spent a little bit of time consolidating back in August, September before we made a nice breakout to the upside. We've been up there ever since. We're right at 200-day at the moment, around 69.60, and I think somewhere in this range is a nice little risk range to potentially get on the long side on Woolies, especially after if you get a chance to buy it there after these SPAR numbers. And that's it for today, guys. Thanks a lot.